welcome back to the Millionaire Logistics FX channel. Trust you guys have been benefiting from our forex trading strategies and forex trading education, forex trading analysis that we share with you. And on this particular content, guys, we'll be sharing with you same MLX IVT trading concept and trading strategy that we have been using to make decent profits off the market consistently. So guys, as we share this, to subscribe to the channel, don't forget to like and don't forget to share your thoughts in the comment section as we trade forex with Millionaire Logistics. Okay guys, so looking at this chart from the pound USD, guys, pound USD 15 minutes chart. I'll be listing out with you the concept and the parameters that we use to analyze this market and any other market, guys. Okay, so the tools we apply, guys, are simply MLX IV. Another tool that we'll be using is the trading sections identifier, guys, rather on the chart, and that is the Fibonacci retracement tool. Okay, those are the major tools that we use and we shall be using to backtest this particular pair. Okay, then going forward to the concept to use, guys. Now we're trading the pound USD. We're looking at the pound USD, guys, and for pound USD, we want to be trading the pound USD when the market is mostly active. That means we're targeting the London sections and what the New York. Looking at the charts here, you can see that. So we want to test how we came by this particular moves. All right, that's what we want to achieve here. Okay, now without wasting much time, guys, let's look at the very much things that matter. Okay, now we are taking cognizance of what? First, the high and the low of the previous day, right? That's one parameter to look at, the high and the low of the previous day. Okay, and if you look at this chart here, from this you can see well that this is the high of that day and this is the low, the lowest point that the price actually met, right? So from the high and the low, we have one reference point. Looking at the order flow, you can see that the market is going to the upside first, right? Even though there was this kind of drop to this side. All right, so we want to put our Fibonacci tool from the low here to what? The highest point, right? And there's also something we want to note. So this is our first reference point. I'm going to highlight it with this box here. This is our first reference point. We want to see the market react somewhere around here and perhaps come down, okay, because this is the highest point. All right, now we have the structure here. Without wasting much time, we have the structure as the what? The highest point of the previous day. You can put high P, and the lowest point of the previous day. Okay, you can note it with whatever you want to note it with. Okay, now looking at that day, remember I want to be trading, so this is the first reference point. Okay, now looking at the day being the third, right, I want to be trading again the trading session. I want to be trading between what? The London session and what? The New York session. Okay, so I will be first entering the market at about 8 a.m. Nigerian time. That's when I want to start hunting the market. Although entering the market 10 minutes and also to settle down and look at the market flow, it's very much advisable too as well. So I'll take that into cognizance. Now the Tokyo session is the time that I use the Tokyo charts, the charts that are printed on the candlesticks rather, that are printed on the chart to analyze the market structure within that time for me to get an entry. Okay, now we have our first reference point here. You see this indicator, this would actually do exactly the way you see it here, to act the same way, right? Because this is what we have actually programmed, okay, the MLX IVT. Okay, so from this time here, remember the chart time here should be 10 a.m. 10 a.m. chart time, 8 a.m. real time, right? I'm trading from Nigeria. Okay, so from this Tokyo session, you see this move. All right, now from this time, guys, I'm not in the market, so I come maybe by wanting to hunt the market somewhere around here. This is 10 a.m. all right, but I see this impulsive move to the upside, very explosive, bullish candles all, to the upside. And what? The market has reached this first reference area from the previous high and low from the previous day. Okay, now this is what I want to do next. Coming here, seeing this move, this impulsive move to the upside, breaking this structure. Let me not complicate it. I want to make it very easy. All right. Now I'm analyzing. I want to look for daily profits. All right. Now I take this low here, right, of the Tokyo section, right, and the highest point before the London session, which is here. Now you see that this corresponds with the move. All right. Now this is another thing I want to take cognizance of again. Now, mind you guys, this is what we did here. The lowest point, right, of the day, the Tokyo section before what? The London session, right, and the highest point again. That's another thing, right? So we have a what? We have a high here, right? Let's say we have a high here and we also have a low right here. So within this high and this low, we're trading in between the range, okay? And in between the range, we're going to get an entry that is expected that the price will actually go to what? A higher high, right? So we now have market structure embedded in this. So we want to take the price from what? First of all, we want to take the price to what? From within this high and this low, we're going to have another low, right? Which would, when the price comes down, we'll have what? A higher low, right? And then we push price trade in direction of what? The price flow to what? A higher high zone. Although depends on the market move, but remember we're slightly between scalping and day trading, all right? But let's spot the difference here, okay? So looking at this carefully, let me take this off. Okay, looking at this carefully, this is where the time of the day comes in, and this is also where the Fibonacci retracement levels comes in. In our previous content, guys, perhaps you have not seen that, but you should make reference to it. You see how we plotted that Fibonacci zones, and the zones we actually use as reference point. For me, I make reference to the highlight here. I make reference to what? The 38.0, the 50.0, 61.0, 61.8, and the 79.0. Okay. Now within this time, let's see how this market performed. All right. Now, if you look here, right here, the London session starts here. This is 10 a.m. And 10 a.m. before then, you can see price rejecting from what? The 61.8 fib level, all right, which leaves us at this point. So from this point right here, we've seen this move breaking to the upside, and we can see how the price moved. You can see how the price moved from here. Let me move this, okay, to where it was, and you can see how the price moved from what? Here. And if we are targeted here, perhaps maybe not, gone to the minus 0.27 and all that. If we are targeted this range, at least would have made what? 99 pips, 100 pips or thereabout, with the stop loss just below here. But then you see that price did something. Price reacted again to this reference zone that we have here, came down a bit, but what? Went to the upside. So what this price has done was simply coming to this downside, right? Forming what? A higher low here, and then moving, giving us profits to what? The higher high. And that ended the day. Simple profit, okay? So let's go on to the next and see how it works, all right? So for the next day, guys, I can take off this reference zone. Let me take this off. I can take off the reference zone here. I can take this off, and I can also take the Fibonacci level off, all right? Now to the next day, guys. Now I have this as my high of the day, the previous day. Right now I have this as the highest point of the day, and then this as the lowest point of the day. You can call this your high previous day, right? Your low previous day, okay? Now I want to see, I don't know what this is yet, but let's see if the same thing will apply here, okay? Now from this low, right, seeing that the market went what? From the lower point, right, to the higher point. So the market flow is upwards, all right? Now from this point here to this point, looking at it, you can see how we got to this point, guys, okay? So our first reference zone, right, should be here. Remember, guys, if we come into the market, if we come into the market and we see that these zones, perhaps the price just went to the upside, right, before the London session, we may have to adjust this reference zone to what? The highest point, to the new highest point before the opening of the London session, right? But as time goes on, guys, we'll see how that works out and we'll unveil that as well, okay? Now, we have this as a high previous day and all that. So we have our first reference to be this zone, right? This zone here is our first reference zone, okay? Now I can take this off, right? And then look at the day carefully. Now, during the Tokyo session, which is very visible here, you can see if you look closely, guys, we've seen Tokyo, London, and New York. That's what our section indicator has done for us, the MLX session indicator. And all together, guys, makes up the MLX IVT and the MLX trading session indicator or guide, all right? So right here, we want to use our Fibonacci tool as well, okay? Now, coming to the market before, by this time, we may have seen this move to the upside, all right? Now, seeing that during the Tokyo session, the price broke this reference zone to this point, very easy, very easy. We have this right here. Now, because what? The price actually moved, right? The price actually moved from what? You can see this move before the London session. Now, the London session started here between this range, right? The London session started here. So this is our 8 a.m. London session, okay? Now, definitely I may not take this move. Why? Because, guys, from the analysis and all, there is a kind of supply zone somewhere. There is a kind of liquidity grab somewhere around here, around this zone. Let me highlight it, okay? Somewhere around here, there was a kind of liquidity grab there, around there, right, from the previous markets and all, right? If we move backwards, we can actually trace that, but there's no time on this. But then if you're using the MLX IVT, you would actually see this zone and know that closely that this market may actually stop somewhere around here within the London trading session and New York trading session as well. So if you miss that move, definitely you'll be going for that liquidity grab. And after this, guys, after this confirmation bearish candle, it's okay to take some little profit here, down to the place where you have this activity, this resistance level, whatever you choose to call it. You can have 38 to 40 pips, somewhere around there within these levels, within either of these levels. And then coming to the New York session, which presents another opportunity to, guys, you may see that the New York session, which starts by 1 p.m., guys, you must have seen the rejection at the 79.0, and sure well after this move, taking advantage of this to hit the range right here. That's about 70, 69, 70 pips installed, and that will be the end of the day, okay? Now, you see how this simple concept and this very much simple ideology works out for us. So let's take this off and let's move on and see how interesting it goes, okay? Now, guys, this is the very part that's very much beautiful. Now, guys, we're still with the assumption that, hey, this market is still to the upside, okay, seeing the market flow. And we also want to use what? The same concept repeatedly, the same concept repeatedly, all right? And we have what? Again, we have what? The low of the day, low of the previous day, and the high of the previous day, all right? And then we're looking at the market from this point. Now, the Tokyo session, you can see how well the Tokyo session, within the Tokyo session, you have this activity right here. So from the beginning, guys, this is the Tokyo session, the high, and what? This is the price before the London session, okay? Now, the London session, you can see very much that the price fell within that range, and then you immediately you're going to see how MLX IVT and everything, we just draw this zone for you to actually see that this market is coming to the downside. And from here, within the London session, remember, guys, it's trading pound USD. So within the London session, we can see this profit to be taken either to this level, the 38, or to the 50 or the 61, whichever way. And now during the New York session, guys, you can hardly see any retracement to the upside. It just fell to the downside. Now this is the interesting part of it. Now when this price happens like this, guys, with this very much zone here, this tells us one thing and one thing only. I've mentioned this in our previous content when we're discussing market structures and everything about market structures using this concept of trading. Because we've seen that this market here, you can see that this low has actually broken the previous low, right? So we may have a change in market sentiment, being that price was previously in an uptrend, right? Let me take this off. Price was recently in an uptrend, making what? This is a low, making what? Highs, and what? Higher highs, higher lows, higher highs, what? Higher lows, higher highs. You see it? Higher highs, higher lows, higher highs, right? And during this day, guys, the price could not make another higher high. Rather, what? Price made what? An equal high here, equal high, and price broke the structure, and instead of making just a higher low, it broke this low and also broke what? This low, and came here to form what? A low right here. And before this day ended, guys, you can see that price stalled at this point, which is what? The 68. I'm going to draw this again, so let's just take this off. Let's just take this off, and let's also take Fibonacci to, let's adjust the Fibonacci tool. So we want to be looking at, let me take this off too. We want to be looking at this day, right? How this day performed. And guys, I took a trade off here. In fact, this was a very brilliant trade I took today, right? And we want to actually see how this works and take advantage, just to explain this market structure to you in less than 2 minutes, okay? Now, if we use our Fibonacci tool to plot from what we now have the low from the high of the day to what the low of that day, the previous day, okay? So this is what we're going to be having. This is what the high of the previous day, and this is the low of the previous day. And now we've seen that price has what? Broken this low, the previous low, has broken this low and this low. So there's a new low here. And then before the day ended, guys, you also see price retracing toward the 50 fib level, okay? Significant one. So we have a reference point now. Remember, guys, we're talking about reference point. So from this point to this point, guys, we now have a reference point. We have a range first, and then we have a reference point somewhere around here. Let me highlight this. Okay, for the next day, we have a reference point here. All right. Now we also want to take advantage of what? The London session, like I told you. But then note this, guys. As price makes this move, okay, within that previous day, having this high and this low, we have a range that price could actually reach any of these levels. And on that day, it ended at what? This particular point here. And what will this be, guys? This will be what? A lower high. Why? Because between this high and this low, the previous high here is higher than this high, which makes this high lower than this previous high. So we have a lower high here. Market structures, if you go back to the basics, you have high highs, higher lows, higher highs, uptrend. While in a downtrend, you have what? From the highs, you have lower highs, lower lows, lower highs, lower lows, downtrend. Okay, so incorporating all of that to actually build our own trading concepts and trading ideology that helps us to make consistent profit off the market. This is actually how we think of the market, and this is how we take trading opportunities daily and maximize them. Okay, so looking at this right here, one may wonder, but it's very much interesting, especially with these tools that we've been trading with and we've developed so far. Okay, Now you can see how the area here is highlighted. The MLX IVT does all the complex work. How it's highlighted, we use our Fibonacci tool to confirm trading sessions to guide us on when to take those trades and get very much reliable entries off the market. So coming to the day, guys, I saw this market coming. Like I was like, hey, this market is going to react here. So the London sessions, guys, you're going to see here exactly. Let's see how it worked. At the Tokyo section, when the market opened, it started with a high and to the high on this side, and it came downwards, not breaking here. Within here, forming what? A lower high, but it's very small, right? And it came down, breaking this structure again. You can see breaking this structure, forming a lower low at this point, guys. And within the London session, guys, I just was waiting because with all this activity going on here around the 50 fib level and all, seeing that price has earlier in the Tokyo session reacted around what the 60, between the 61.8, so this should be around 60.75, price rejected, came down from the lower low here, and then within the London session that started here, sorry, I think I need to zoom this a little bit. Let me take this off and zoom in a little bit, okay? So we'll see exactly what I'm saying, okay? So within the London session, guys, within the London session, we started here, started by 8 a.m. here, you know, not really paying much attention to this significant move. I'll be expecting to take my trade right here and seeing this as a confirmation. This impulsive bearish candle is a very big one to me. All right, it's a very, very big one. So I'll just simply take down. Remember, now we're using the Fibonacci tool from the previous day reference because definitely price was trading in between the range. But if I'll also do it with using the day, using just the day information, because this will only give us a reference using the reference, right? But can still use it since the price between these ranges, these barriers. With this confirmation tool, guys, this is actually a trading opportunity with about 100 pips for today, which is cool. I took this trade right here, okay? Now, taking off this Fibonacci tool too can also give us a hint, all right? We can also do this, have this move right here. Seeing this move from the upside to downside before this move, we can plot it just the way it is, right? Just the way it is. And when you come up here, you see how price will be playing just around this zone here, around this range. And one can actually take this to either of this level, the 79, and have 30 pips right here, because from this particular rejection here, we're rejecting the 38. So within the 38, price may come here and react whichever way, but you can see all these confirmation moves around here that creates opportunity to trade the market. All right, so guys, with this, guys, we have just done a very sketchy back test of the pound USD trading psychology and using pound USD trading concept, trading strategy, and analysis from Millionaire Logistics FX. And we'll also be doing this consistently and comfortably. So guys, I'll advise you get the MLX IVT for yourself to aid your trading. And also, don't forget to share content. Don't forget to stick around to learn more of this strategy and trading concept, because it's going to help you. Thank you very much and see you in our next content.